Here's a question for you. You've been offered a line of credit from your bank. Should you take it? Now, I'm talking to business owners here, and I work with a number of small business owners. And today, best question in my email box comes from one of them. He says, we are considering a business line of credit. There's no emergency. There's no cash emergency here. And I thought it might be better to fund a new business purchase with a line of credit and build our business's credit rating utilizing this facility. Do you think that having a large line of available credit, say $50,000, would be a bad move or affect us personally from a debt-to-income ratio? These are all great questions, and I think a lot of small business owners have asked themselves this. And as you start to gain a great relationship with your bank, they're going to come to you at some point and just offer up a line of credit. And if they don't, ask them for one. And if they won't give you one, then you either have a severe credit issue or you need to find a new bank. So let's unpack this, because this is, this question was put perfectly, and this is basically the big three issues for any business owner that is considering a line of credit. So let's start with the number one thing, which is this going to affect your debt to income ratio? And for most small business owners, they're funding their lives from their business. And when they walk into a bank, the first question that you get for any application for anything is, who do you work for? And when you say you work for yourself, you suddenly are under a lot more scrutiny. Good news here is that most business lines of credit, in fact, I've never seen one that wasn't, are not on your personal credit report. So they're not going to show as a debt to income ratio issue. They are a debt on the business. And even if you have a personal guarantee on this, usually it doesn't show up on your personal credit report. So let's put that issue aside and assume that that's not going to be an issue 99% of the time. Then we go into this question of, is it better to fund a business with a line of credit? Is it better to utilize credit facilities because you're building up your business's credit rating? And the answer is no. I'm sorry. I'm really sorry that the answer is no, but it is. We have, in the business world, you have the equivalent of your personal credit report in a Dun & Bradstreet report. And that shows some things. And yeah, using credit, I guess, could make a difference to somebody. But at the end of the day, most business credit is between you and a lending company, a bank, etc. And you're filling out an application, you're showing assets, you're showing income. They're not generally looking up a credit report for the business and basing a lot of it on any substance there, unless there's negative reports on your Dun & Bradstreet. Most of the time, and this is for businesses that are pretty large. There are $100 million plus businesses where the application process that goes through a lending institution ends up looking at some of the main ownership, key players in the business's personal credit reports. And that's because there's really no such thing as a functional business credit report, which brings us to the last issue. Does having a large line of credit, in this example, $50,000, make sense? So let's talk about large versus small for a second. $50,000 and under is small to a bank. They don't want to do $10,000 line of credits. They don't really want to do $25,000 lines. They want to do $50,000 lines, and they have unsecured, sign and drive, ready to go, virtually any business, $50,000 lines available. All you have to do is have good credit. And by good credit, I mean probably, close to 700 or above 700, maybe even above 720 at most lending institutions. If you have that and you have a business that you can demonstrate is profitable, you have a tax return that shows profitability for 2 or 3 years, you're pretty much a shoo-in for a $50,000 line of credit, which by bank standards is considered small. Now, once you get that line of credit, is there an annual fee? It's probably pretty small. Today, interest rates are pretty tiny, so could be a use for that line of credit that has a positive ROI. Let's talk about the things that you do not use that line of credit for. So number one, boat. Don't buy yourself some fun toy with your line of credit that is not going to give you a return, and suddenly you just have more debt. Number two, don't take a vacation with it. And this is one of the big reasons not to have a line of credit and a big cushion, because as a business owner, you need that fire under your butt. You need that motivation every day to kick some ass. And if you're very well taken care of on the cash side, you're going to be less motivated. It's just naturally how humans are. There's nothing you can change about that. The less urgency there is for you to do something, and this applies to anything in your life, the less likely you're going to do it. So there's a downside to getting the line of credit from that perspective. Here's a big no. I think too many people do this. They'll get a line of credit and then they'll use it to solve a cash flow problem that is a medium to long-term cash flow problem. And the problem with that is that they're not really addressing the issue, and it lets them continue to have the issue in their business. So we've talked about things you don't do. Let's talk about the things that you do with a line of credit, because you're looking for a positive ROI. And if the rate is great and it extends a relationship with a bank, why not? So first thing you might look for is some fairly short-term but high-interest debt that you can clear off utilizing that line of credit, which puts you ahead. And then you can budget for not only the regular payment, but additional payments to pay it back down and quicker, and you'll get further ahead faster than if you had the stifling higher interest rate debt still around. Second thing is you could utilize it for something that is a verifiably short-term cash crunch, rather than pulling from somewhere more painful. So it might just be a peace of mind issue. Number three, I'll give you, I think this is a pretty good one. Equipment with an ROI, staffing with an ROI, expansion with an ROI. Basically, if you have invested in something prior and you have done it multiple times, you've added office space, added people, added a truck, added a crew, added tools, added a service, and you've done that multiple times, and every single time you end up more profitable and with more revenue, then a line of credit could simply make it so that you can do more of that at one time, and you don't have to wait for all the returns to come in before you invest again. You can invest a little bit now utilizing someone else's money. And if you look at every billionaire in the world, there isn't a single one of them that did not leverage in some way somebody else's money. So there you have it. Go get your line of credit, at least the $50,000 one.